I'm joined here today with my special guest. This is my eldest daughter, Isabella. When she heard that we have a YouTube channel and people watch the replays, she said, "Dad, you won't let me have a YouTube channel." But I said, "Good news, you can join me." She's nervous as all hell. I didn't pre-warn her. School holidays here in Victoria just started this week. So I have both my daughters here. The other one is nowhere to be seen. What's she doing? Eating chocolate biscuits, watching an iPad? Yeah. So, unfortunately, you only get to meet one. Now, you helped set up this camera setup as well, didn't you? You've got an earpiece in. Were you in the green room before chatting to the boys, all getting ready and excited with all the questions?
Yep.
Are you going to stay and host with us the whole session? No? Okay. So, look, before we get into it, I'm really just wasting some time. Are we live on Facebook yet? No, we're not on there. We've got issues, so I'm going to just keep going through. So, look, maybe perhaps while we're waiting to get onto Facebook, let's find out what happens in, what are you in, year 7? Aren't you? Year 7, all right. So year 7, maybe you can tell our listeners out there, we talk every single week about house prices, what's going on. What's the year 7 view about house prices? What do you think is going to happen?
Well, my mum says it's going up and everybody wants to move house. So.
Well, there you go, everyone. You've heard it. Yep.
So.
Move to America, do they? Okay. So there you go. You've heard it live here from year 7. This is what I pay all my school fees for. House prices are going up. Mum wants to buy a new house and we're all moving to America, are we?
Yep.
And is that because we're Trump lovers or is that because now Biden is in?
No, it's because you can get mansions in America.
Right, you can get mansions. So there you go. This is what our kids think about. Prices go up, buy a mansion, and it's simple, but go to America. And TikTok's not banned in America, so we can still go there safely. Okay.
Meet all the famous TikTokers.
There you go. So meet famous TikTokers. Now, just before you leave us, perhaps for our younger fans out there, I've been meeting a lot of our customers over the last couple of weeks. Surprisingly, it's not just you that love some of my videos. What's the latest trend on TikTok that perhaps we can try and work into one of our next videos? And it's got to be a G-rated one. So I know some of those with rude words are not allowable.
Dance at the end.
A dance. All right. Greg, Jack, Lucas, you heard that. Next week, we're going to end the session with a TikTok song and we're all going to do the dance. So those of you that haven't joined before, we don't normally get up to this much fun. It's a school holiday special. So Isabella, thank you for joining us. I appreciate your effort. I know you're stressed. You can now go and relax behind the camera while we get into it. All right, everyone. So I did waste more time than normal there. Hopefully that was enjoyable with a little bit of difference. So let's get stuck into it. It is the 23rd of June, 2021, and this is question time. So let's quickly run through the major themes from the last 7 days. Reason house prices keep rising. Isabella told you they're going up. She doesn't know why, they just are. Unit prices outpace houses in top suburbs. So apartments is finally starting to build some momentum. Vacancy rates, major CBDs are finally starting to see those tighten up. So we'll delve into those stats. What can you do to secure a great tenant? And also, where does the major economists feel that we're going in terms of lending? Is APRA going to clamp down on that? All right, let's run through auction stats from last weekend. Again, you can see a pretty healthy result. We're perhaps not seeing quite the same volume. So you can see here, Sydney had a super Saturday again, over 1,000 auctions with more than 82% clearance rate. Melbourne's slowly getting back into its gear after the 2-week shutdown we had here. So seeing pretty strong over 70s and just under 800 apartments. Rest of the country doing well with just under 78% national clearance rate. So still going from strength to strength as we're going through. I think it'll be interesting to see what the guys have to say when we drill down into those stats a little bit more. Okay, those of you that haven't joined us before, I like to just run through what we call a leading indicator. This is from realestate.com. And this basically is, if you can picture yourself going onto their website, when you look at a listing, whether it be for sale or for rent, and you click on the inquire, you email the agent, or you download some of the information, they take that as an intention that you're more likely to buy in the short term. So they put out these indicators that are a good gauge as to what's going on. Obviously, the auction results are great, but they just tell us what happened in the past, not what is going to happen. So if we have a look here, this is the national indication. It's gone up slightly. I think it's gone up almost 3% over the last week. Probably the biggest thing is if we forget that period here for Corona and just look at what we're seeing in 2019, we're almost 50% above those levels. So I think that is, clearly translated when we're seeing the difference between, where the market was 2 years ago in 2019 versus where it is here now, and still seeing that strength going through. Let's have a look at our local market here in Victoria. It follows relatively close to the national one. You can see it's had probably a much stronger pickup. Obviously, those 2 weeks that we had with that most recent shutdown obviously saw a dip and a strong rebound coming back after that. I think it's up almost 4% on last week. So expect to see Melbourne continue to go from strength to strength. As we always say, it is probably 6 months behind Sydney. So we expect as Sydney's growth starts to slow down a little bit, that Melbourne will start to take that top position on growth. Rental, what are we seeing? Look, I mention this every week. It's a hard graph to understand. It's perhaps not what we're seeing on the ground. It's seeming to be pretty steady. I think, we always, talk about the main rental markets are here in the CBDs or the inner city areas that no doubt we're all aware have been hardest hit over the last 12 or so months. But we're still seeing pretty good intention in terms of that demand from people. And I think, we're starting to see some of those stats with vacancy tightening up. If we go to the local market here in Victoria, you can see there's a big increase there, in terms of its jump. Again, very similar to the sales as we came out of that most recent 2-week shutdown. People thinking about moving again, potentially as well. I don't know the detail behind that data, but perhaps, again, those people that, had forgotten that they needed some extra space at home might have rethought about that and decided to start looking for that extra bedroom or that study area. Interestingly, just this week, I think it was Greg was mentioning to me that, people love what we call a winter garden, which is effectively an enclosed balcony. And they're looking to use that as a study space as well, which is a great use of that space. So that could be what we're seeing that spike here in Melbourne. All right, let's quickly rush through this. I've seen most of the names that I saw on there while I was chatting with my daughter seem to be familiar. So you've probably all seen this before, but if any of you are new, I want to know what's more important, information or knowledge. If you were paying attention then, you would have seen I just gave the answer. If you're new, just take a couple of seconds, think about it. Is it information or knowledge? All right, it is knowledge. So hopefully those of you that don't remember the answer, pick that. Why do I say that? Well, information is organised data about something, whereas knowledge, on the other hand, is an understanding either through education or experience. So, if we think about that in sort of a factory line, you take that information and you create it into knowledge. So, information is just data, but you need to have the experience or the education to understand what that data means and turn that into knowledge. And most importantly, what we talk about is actionable knowledge. Now, knowledge is great, but if you don't set it up in such a way that you can take action from that knowledge, then really all you're doing is just filling your brain with information. Sure, you understand it, but you haven't built yourself a roadmap sort of telling you, based on this, I should do this. Or when this happens, it means this, and therefore I should do that. Now, we drill that down into your home buying journey. If this occurs, then I should buy this type of property. Or when these circumstances occur, then it's a good time to buy, or it's a good time to sell, or it's a good time to do this. So, that's very much what today's session's about. That's what we're all about here at Salvo. Those of you that don't know what we do, ultimately, we do a lot of things, but our number one key focus in all our business is about helping people create a home. So everything that we do is built around giving you that knowledge, so that you can build your own database of actionable knowledge, so you know what you should be doing to make sure you've set yourself up to take the right actions at the right time. Okay, that's long enough about me. As I said, we've gone over time a little bit already. So who am I? My name is James Maitland. I'm the General Manager here at Salvo. I've been doing this for more than 20 years. And I've helped create more than 11,500 homes for people like you on the call today. I'm joined on the panel today. We've got Greg Arbeck, Jack Gian, and Lucas Karras. These guys have got a wealth of experience and they'll be answering all of your questions today. Those of you that haven't done a Zoom webinar before, you've probably been under a rock. But if you're not sure what to do, there's two ways that you can get involved. The first option is to raise your hand. Press that button there. We'll see it on there. We'll unmute you and you can ask your questions. Or you can do the tried and tested way, which is drop it in the Q&A. I'll be watching and reading through that. I've got another screen in front of me. And I'll be putting all of your questions to the guys on the panel. So let's get stuck into it. First up, before I can read the questions, my question, guys, we've been talking probably, I'd say, all of this year and potentially, the last couple of months of last year about house prices. They're going up and up and up and up and up and up. We keep asking the questions why. And I think, we'd be pretty hard pressed if you've been tuning in, at least once or twice in the last 6 months, not to know that, it's primarily driven by interest rates, being so low and a number of other factors, that we're doing perhaps a lot better than we thought economically at the start of the pandemic, more than 12 months ago. But there are some other sort of structural issues within our market that also drive to house prices being increasing regardless of the time we are. Who's got a view on that and can sort of run us through a bit of detail to explain to all of our listeners about that?
Well, James, as you said, the typical culprits are interest rates, the tax incentives, the government, all these different things have helped drive pricing. But one of the crucial things that we're talking about is supply. So we do hear this thing that we have spoken about, supply and demand. There are more people looking to buy than what they are, but there's a...
Greg, should I get Isabella back to explain supply and demand, Year 7 economics? She can probably help us.
That's exactly...
The bad news is she ran for the hills, so I'm here by myself. But yeah, so I think everyone understands the basic supply and demand. So sorry, Greg, you were talking about the supply being an issue as well, is it?
So people, they just don't realize that there's actually a lack of supply. So relative to our population and stuff like that, there's just not enough property out there for the demand and the supply, and that's what's causing the prices to increase a lot greater than just these other factors that we've spoken about.
Okay. So, like Greg, how do we reconcile this, for our listeners out there where, from time to time we hear commentators saying there's an oversupply, there's this, we've got that. How do you sort of reconcile that with what you're saying that, on a more medium-term basis, we're not creating enough homes?
Yep.
How does that work?
Well, they're building all these subdivisions, as we call them, out in what Australians refer to as whoop whoop. So yes, that'll continue going out there. But we're talking about suburbs, inner city stuff where people want to live. There's just a lack of supply, absolutely relative to the number of people wanting to be in these locations. There just isn't the supply to satisfy that demand, which is pushing prices, the affordability right out of the picture.
Yeah. So, would it be fair to say that, whilst there might be certain areas that do have enough supply or perhaps even have too much supply, it's really talking about having, the right locations, the right amount of housing
Yep.
And then I guess in particular, the right type of housing. So, there's no point in having high density studio apartments if it's a family area that people are looking for, sort of 3-bedroom apartments and townhouses. Would that be sort of what you're getting at?
Absolutely, James. And what you also were saying, we talk about all the times, location, location, location. So
That's rule number 1, 2, and 3, isn't it?
Rule number 1, rule number 2, and when that's wrong, refer to rule number 1. So we're talking about location. So when we're talking about prime locations, there just isn't as you say, there just isn't enough decent stock, and there are actually reasons why, which I can go into it if you want, but there just isn't enough housing to support people that want to be in these prime locations.
Yeah. Okay. Now, look, and I think it's probably something that gets overlooked by people. It's more what we call a structural issue, which I think anyone who's been involved in even wanting to do a small refurbishment at their home will know that the planning process and the red tape to go through is horrendous.
It's a lot of people will actually, I've been involved in development a long time, and if you think your planning is going to take you 2 years, add another 2 to 3 years on top of that, because it's just the red tape and regulations and all the stuff is really hampers getting stuff happening in these locations. Absolutely, it's very hard.
Yeah, and look, and I think it's pretty hard to convince someone that perhaps has grown up in an inner city area. That's where all their friends are. That's where they go to university. That's where the whole social circle and life is based, and convince them that they should then go and live, in one of these new estates that are 50, 60 kilometres away from where they're used to living. I think, that's perhaps where people struggle to understand that, yes, there might be supply and, in some times the supply is keeping up with the population growth, other times it isn't. But as a general rule, it's about getting the right amount of supply in those key areas, and that is why, I guess, Greg, we've spoken about it a few times, but that medium density type housing, apartments and townhouses and so forth are so popular because it gives you a foothold into these great areas at an affordable price.
Absolutely. So as we've always sort of said, if you're lucky enough, or developers or people can actually get these things in those medium density and high rise in these areas, that allows people to stay in these locations and without having to go like two hours out of the city, so. Yeah.
All right. I can see a question here from Margaret, and I've sort of seen a few along a similar line sort of asking, but, apartment prices haven't really gone up in the last 12 months. Has anyone got any sort of stats on that or a view as to where they're sitting?
James, I think we already seen the apartment price growth is beating the house. So as the same topic, I think maybe Greg will talking about. Now we're saying in Australian, and the growth on the apartment, the price growth on the apartments is more faster than a house. Around 190 suburbs, which suburbs are major suburbs. We call it top suburb, which is the people they willing to live. So in those 190 suburbs, the unit price actually is growing faster than a house.
So is that sort of, what's the driver for that? Is that part of this issue with affordability starts to tap out on house prices, or is that just the normal cycle that houses go first and then apartments follow?
I think the main reason to drive the unit price is growing faster than house in those suburbs is because, of course, the location. Like we say, the golden rules: location, location, location. Perhaps because the housing boom in the last 6 months, and the house in those top suburb is more becomes like unaffordable. But the people, they don't want to live in that location. They still want to, stay in that location. That's why the thinking I'm living in that high quality apartment for this location. It makes the price for the apartment being pushed up. it's sort of like the demand, and it's be much more demand on the unit, on the apartments.
Okay. So am I right in saying that you've got people that live in this particular area, you know, whatever area it is that they are living, and rather than, you know, going further and further away from the preferred location just to be able to buy a house, they're sort of looking at it and saying whether they're downsizing, upgrading, you know, buying their first home and changing from being a renter or moving out of mum and dad's home, that, you know, the price point of houses has become unaffordable, so that in order to stay in that great location, they're looking at this medium density option of having an apartment in that same location.
Yes, that's correct. And the plus now is all the apartment in those suburbs is, I mean, the high qualities. It's not like the normal unit, the beautiful apartments, beautiful unit, the everything. They live in the location, plus they can still live in the high quality of the apartment, the property. So they're happy to, you know, looking for the apartment. But of course, like we say, other reason to driving the price for the unit to growing faster than the house is also because, like Greg mentioned before, is short of the stock, like the supply, demand and the supply. So as long as, you know, we have the big demand on the unit, but we don't have the enough stock to supplying, also makes the unit price, the apartment goes up very fast.
Okay, good. So I can see a couple of questions have kept coming through for that topic. Hopefully we've answered that. A few people have mentioned the concern about investors and perhaps, you know, APRA stepping in and doing something to slow down this housing market. I think we've been talking for a while that we don't see this happening, but is there any sort of statistics out there anyone's got that can sort of run through, you know, what happened last time and why we think it's not going to happen this time?
Sure, James. Look, despite the rise in investor lending, it remains close to 20-year low at about 26% of new lending. Now, you talked about APRA before. Yes, they did intervene in 2014.
So sorry, Lucas, just to clarify, what you're saying is that the percentage of new loans being written that are written to investors is at a 26-year low, is it?
No, 20-year low.
20-year
and
low,
it sits at about 26%.
Yep. Okay, so about a quarter of all loans, new loans that are being written to investors.
Correct. Last time that APRA intervened was in 2014. And back then, it was at 40%.
Okay, so almost double.
Correct. So now, while investor lending has increased, it will take more than 12 months to reach the 40%. So just to go back a bit, when we had the last boom in 2009, 2010, it took 16 months back then to increase from 28% to 40%. And due to these figures, they're saying that macroprudential fears are premature and they don't see any restriction being introduced for the next 24 months.
Okay, so, you know, we're talking at the earliest, what, 2023, mid-2023?
Correct.
That'd be your 50th then, isn't it?
There's no need to go into that right now. We're talking about other more important.
I'm just thinking about the party.
40, my friend, 40. Not 50.
Okay, so, you know, we talk about this a lot, and I know we have a lot of we've got a lot of investors always asking us and getting a bit nervous as to where things might go. You know, why, aside from just looking at the cold hard numbers, you know, what are some of the other underlying factors why, you know, generally the sensible commentators or economists are not seeing this as a risk, you know, at least not in the next couple of years?
Well, as we said, obviously, I mean, the banks already take this into consideration. For example, CBA has recently increased the buffer rate. So although you might go and get a normal loan and the variable rate is about 4.27. They also add another 2.5% when they do the assessment. So they assess their clients on being able to repay at 6.77%. So they're already preparing. They know this will change in the future, but they're already preparing from today.
So what you're actually saying is that whilst you could be paying as little as 2%, the banks are assessing your ability to repay that loan on 6.5% interest. So
correct.
It's going to be a long time before interest rates get up to 6.5%, if ever in the near future, and go over that. So they're not concerned in terms of their risk and how they're writing those loans. But they're saying, as at today, if I'm lending you a loan, I've done that on the basis you've got to pay 6.5% interest, not 2%.
Correct. And all of the 4 major banks have agreed that our clients are not borrowing their capacity to begin with anyway. So it's not like they're maxed out. So although they've put that buffer of 2.5%, they're saying their clients are still not at capacity. So nobody's really worried, James, at this stage.
Yeah. So what you're saying is, people that are going and seeing their local bank manager or coming and seeing a broker and getting like the traditional pre-approval type letter saying, based on your income and expenses, this is how much you can borrow. No one's actually going to those limits, or as a general rule, they're not hitting those limits all the time.
Correct.
Okay.
That's 100% correct.
All right, let's park that there. I'm just getting conscious of time. William's asked a question about vacancy rates. I know we probably haven't touched on this for a little while, but obviously last year we spoke a lot about this. It was sort of a bit of an odd market that some of the regional areas that had a very, very small rental market had next to no vacancies, and the inner city areas that probably comprised of 70% plus of the total rental stock, particularly Sydney CBD and Melbourne CBD, had much higher vacancy rates. I know for us firsthand, we are, sort of not finding in our portfolio of investors properties that we've got that higher vacancy rate. We've definitely had to work at, probably 5 to 6 times harder over the last 12 months to get those vacancies down. But as a general concept, they're starting to go down. Is that right? Is that what we're actually seeing in the facts and figures?
Yes, James. The vacancy rate is actually going down. Yeah, like you said, it is true. It was the higher vacancy rate, especially in the Sydney and the Melbourne. I think the peak time, back to the few months ago, we're talking about in the Sydney, in the peak time, which is the same month last year, the vacancy rate in Sydney is about 16.2, and then now it's down to 6.8. In Melbourne, I think last September, when the peak time, the vacancy rate is about 10.8, nearly 11%. Now it's down to just 8%. Nationwide, we say very, very good figures. The vacancy rate is down to 1.8%, which is the lowest number in the last 10 years.
Okay. So, whilst it's been a challenging time for landlords, would it be fair to say that I think as a whole, things are starting to look better? Notwithstanding, we had a bit of a snap lockdown for 2 weeks. Sydney's got a few small issues at the moment. It would seem like, the worst is behind us. Yes. The onwards, the trendy is the vacancy rate is going to downward. Okay. So look, I think definitely I can see there's quite a few comments coming through. Not sure the questions sort of saying, no, you're wrong. I've had a property. It's still vacant 12 months later. Look, there's no doubt, we're talking at a general level here. But I think that there is no reason, if you've got an inner city property and you're realistic about the market pricing, why you can't get it away. Sure, if you're in one of those mining towns that's effectively disappeared overnight and there's just no one there, I think, that's always going to be a struggle. But in the inner city area, I don't think that there's any reason why you shouldn't be able to get that property leased, if you've got the right strategy and the right person on there. So, with that in mind, what we've obviously, I think most of our customers, have done as well as they could, given the circumstances over the last 12 months. I know you guys have been on the ground leasing probably 2,000 apartments in the last 12 months, out of only probably 1,000 that we manage. So, you've had to lease every apartment twice in, only 12 months. But what are some tips perhaps someone might have, if anyone's got any aside from a regular tip man out there, for perhaps some of those people that have put through some questions in terms of, saying that they've struggled to retain the tenant, or perhaps even some I saw, said, I still am vacant 12 months later.
I thought you never asked, James. I thought you never asked. Look, to attract the best tenants and persuade them to stay longer, I've got some good tips for everybody out there, for all their landlords. So first of all, present your home at its best. Make sure it's sparkling clean. Make sure there's no signs of mold. The floorboards look good. Tiles or carpet are in good condition. Have the walls washed or freshly painted. Now, sometimes this is not enough. So when it's not enough and you need to do a mini upgrade, that should not cost you more than $4,000 to $5,000. And here are some tips for that to make sure you keep it at that cost.
So sorry, Lucas, just before you jump in that, I think what you talked about, just having it clean and potentially repainted, is probably particularly relevant for those people that have had their property vacant for an extended period, because just naturally they get dusty and dirty, and open homes, people coming through. That's probably the biggest bang for buck for anyone out there who's had vacancy, for more than a few months.
Correct. So now, if you are going to sort of do some minor renovations and spend some money on the property, so some of the smart tips that I got for you is, look, if you've got an existing floor that's not good, just lay tiles over it. So you don't have to rip it out, get rid of throwing everything away. Change your kitchen or the bathroom taps, like little things that people can see that really stand out. Add a new shower screen, paint over the cardboard doors, add some nice lights. Now, it's also important to get professional photos to capture the attention and make sure your hero shot, and I've seen this many times, the hero shot is something people want to see, like your kitchen or your living area, not the building exterior, for an example, that they can just see from outside. Now, also videos are very helpful, especially now due to COVID. Now, I'm not talking about fancy, expensive video, more of a walkthrough to show them what the property is like. And lastly,
you know who loves doing walkthrough videos? I'm a big fan of that.
That's right. And lastly, my last tip, it's very important once you find a tenant to make sure you keep them there for as long as possible. So now it gets down to having a great property manager. So for an example, if anything needs repaired, must be looked at, make sure they look at it straight away. Make sure the tenant feels like they've been looked after and cared for, so they can stay there as long as possible. So they're my 8 tips, and I hope our listeners out there find them helpful.
All right, good. Look, there's a few more questions coming through. I apologise. I want to just make a few closing comments, and I can see we're well past the top of the hour already. So let me just wrap up with a few closing comments, and then those of you that have still got questions, hang around at the end and we'll try and get to you if we can. All right, so look, today was great. I hope you got a lot of value out of it. I hope even, the starting, getting what a 7-year-old, a year 7 student thinks. I think she must be 12, if I get that right. But really, you've got to move forward from here. So, the way that I sort of see it is that you've got 3 options from here. The first thing that you can do is do nothing. So what I mean by doing nothing is don't change anything. Whatever you've been doing up to now, you just keep doing the same thing. Now, if that's working for you, fantastic. But I'm pretty sure if you're here today and you found this useful, that you want to make a change, something isn't quite right, So, what I just say to you is if you don't change and you keep doing the same thing, don't expect to get a different result. So you've been looking for a new home for 10 years, it's probably too long and you need to make a change. So what I hope that you do at a bare minimum is take on board what we've spoken about, think how it applies to you, really think about that concept of actionable knowledge and go out there and do it yourself. So, do what we've talked about, create those building blocks, build that database and really take those next steps and go out there and do it. We've told you everything that you need. You're more than capable of doing it. But there's another option. And this is what I really, really hope that you do, and let us help you. So, a lot of people are like, oh, but hang on, I don't need help. Oh, I don't want someone doing that. Let me just put it this way. The fastest way to get to your goal is to find the best people that can help you achieve that goal. And what you might think is not helpful now will seem like the best decision you made once you've achieved that goal. So, how can we do that? How can we help you? Well, there's a ton of ways that we can help you, but I think perhaps the most active and dedicated way to sort of, understand your situation and move forward is to meet up one-on-one. So today's great, but, we can sort of see you, we see your names, some of you, we see your faces, but, what we really feel is the best way to move forward is to get together one-on-one. So what I've done is I've specifically set aside time in everyone's diaries over the next 5 days, just for these meetings. Now, you might say, I don't have time, or what's it going to cost me? It doesn't cost you anything. We're talking about 15, maybe 20 minutes at most. It'd be great if you came and saw us face to face. For those of you that are not based in Melbourne or you don't have the time to travel here as well, we can do it over the phone. We can do it on Zoom. We can do it on FaceTime, however you want to do it. It's a pretty simple and straightforward process. We have a quick chat. We talk about where the market's sitting, get an understanding where you are, what you've been doing, what you're hoping to do. And then really see whether you're a good fit for us. Now, not everybody is going to be a good fit. That's just the reality. I'd love to say that we can help everyone, but there's going to be some of you out there that might not be the right fit for us. And that's just life. But what I'd say to you, if you're on the call today and you've gone through this entire session, then you are the right fit. Typically people that are going to work well and get the most benefit out of this, they've got to be motivated. They've got to be prepared to roll up their sleeves and do the work. They're going to know that there's another level that they can get to, and they just need that guidance and help along that way. They understand the concept of actionable knowledge, and really want to get there, but they don't want to kill themselves in the process. So if that sounds like you and you're chomping at the bit, how do you do this? Pretty straightforward. There's 3 ways. The first one is jump across. This obviously only applies to everyone in Zoom. I apologize to those of you on Facebook that want to do this. I think the link to do that is somewhere on our homepage in Facebook or Instagram, or jump on our website. If not, just drop a comment in there and I'll try and get someone to send you that link. The second alternative is your web browser should have redirected to that booking page. I know a lot of you have already discovered that because I saw meeting requests coming through before we even got to this section. Lastly, if you don't have your diary with you and you're not quite sure when this is best suited for you, that's fine. I'll send you a follow-up email after this session's done with a link that you can book that. So once you've got your diary in front of you and you can work out the right time, feel free to book that using that link anywhere. So look, that is it. I know I've gone almost 10 minutes over time. So those of you that have hung around, I very much appreciate you hanging around to the end. Those of you that have run, thank you very much for giving your time to us on this Wednesday afternoon. I know there are a lot of things that you could be doing, so it really does mean a lot to us that you've taken the time out of your day to join us. So from me and all of the panel, thank you very much for your attendance. We look forward to seeing you next Wednesday, next month, next week, next quarter, whenever it is. We are here every single Wednesday, 2:30 Australian Eastern Daylight Saving Time. It doesn't matter whether it's rain, hail, shine, pandemic, non-pandemic, school holidays. We will always be here, so feel free to tune in whenever you can. Any time that you can give to us, we'd love to spend with you. So from me and everyone, thank you again. and look forward to seeing you again. Those of you that want to hang around, do. I'll just give a minute for everyone to drop off, and then we'll have a look if there's any more questions.